In today's video, I'm going to teach you how to record trade-in of vehicle with outstanding loan in QuickBooks. Let's start on the QuickBooks homepage. From here, open the new menu and choose Expense. We're going to use an expense form to capture the trade-in impact and any amount related to the loan payoff or loss on the old vehicle. Don't worry, this process is straightforward, and I'll explain what each choice means as we go. At the top of the expense, click into the Payee area. If the dealership or counterparty isn't already in your list, add it now. Select Add New, and when prompted for a type, choose Customer. This simply creates a profile you can use on the form. It won't affect your sales unless you bill them. Enter a clear name, like the dealership's name, and save. Next, set the payment account. Click the account field and pick cash or the bank account that will reflect the trade-in settlement. If you're using a clearing approach, cash is fine as a placeholder, but choose whatever aligns with your actual flow of funds. Now go to the category details section. In the first category line, click to open the account list, start typing to search and select bad debts, as shown in this example. This category is being used here to recognize the portion of the transaction that won't be recovered, essentially the write-off or loss related to settling the outstanding loan during the trade-in. If your accountant prefers a different account, such as a loss on disposal of fixed assets, use their guidance. The mechanics of this form are the same. Add a helpful description so you'll recognize this later. For example, trade in a vehicle with loan payoff. Then enter the amount that represents the net write-off or payoff difference tied to the trade. Double check the figure against your trade-in paperwork so the expense matches your documentation. If this is something you'll repeat, for instance, if you're standardizing how you post trade-in related adjustments, click Make Recurring. In the template window, choose the interval that makes sense or keep it unscheduled so you can reuse the layout on demand. Give the template a clear name so it's easy to find later, then save the template. Finally, review the expense for accuracy, payee, payment account, category, description, and amount. When everything looks correct, save the expense itself. That's it. You've recorded the trade-in adjustment tied to an outstanding loan using an expense, with a category that captures the write-off portion and a reusable template to streamline future entries. As always, if you're unsure which account best fits your situation, check with your accountant to ensure the posting aligns with your financial reporting.